Indian economic updates. India signed a trade pact with EFTA on Sunday, committing to a $100 billion investment and 1 million jobs. Prime Minister Narendra Modi highlighted EFTA's global leadership in innovation, while Commerce and Industry Minister Piyush Goyal described it as a groundbreaking FTA with 4 developed nations. FDI of $50 billion is anticipated in the first decade, with another $50 billion expected in the following 5 years. Goyal emphasized the potential for larger investment flows. The agreement allows India to adjust concessions if investment goals are unmet, ensuring legal certainty. India's 4th major deal in 3 years incorporates elements like environment, trade, IPR, and gender. Industry experts praise the pact for enhancing market access and job opportunities. Indian stocks plunged 1.5% on Wednesday, defying Wall Street's gains, as investors sold off riskier assets due to recent declines in small-cap and mid-cap stocks. Brokers urged traders to sell smaller shares bought on loans after regulator warnings of market froth and bubble. This caused mid-cap 150 and small-cap 250 indices to drop 4.2% and 5.2%, respectively. Sensex fell 1.23% to close at 72,761.89, Nifty dropped 1.51% to 21,997.70, with 43 of 50 Nifty stocks declining. India's market capitalization fell by 13.5 lakh crore. Analysts anticipate further declines, with Nifty predicted to drop to 3% and small-cap and mid-cap indices by 5 to 10%. States are expected to reduce road capital expenditure in FY25 to focus on social services and meet fiscal targets. The share of road spending in total capital expenditure will decrease to 21.7% from 21.9% in the current fiscal year, according to budget documents. Fiscal considerations and a shift towards social services are contributing factors. States aim to decrease fiscal deficit to 3% of GSDP in FY25. Despite this, state spending on roads and bridges is projected to grow by 7% in compared to the previous year. However, 9 states are likely to witness a reduction in road spending. Centre's capital expenditure on roads is forecasted to slow to 3% in FY25 from 28% in the current fiscal year, resulting in a decrease in the share of roads in the centre's total capital expenditure. Pharma lobby groups welcome the new Uniform Code for Pharmaceutical Marketing Practices, aiming to curb unethical behavior. The code sets guidelines for communication, educational activities, and samples in the pharmaceutical industry, promoting industry advancement and patient care. It ensures ethical engagement between the industry and medical professionals. The government notified the code after consulting with pharma associations. It is now quasi-statutory and applies to all companies regardless of size. Earlier, pharma companies were questioned about offering gifts and free samples to doctors for product promotion, prompting a review of marketing practices in the sector.